Hello, it's Adil bringing you a review of the European markets, more of a wrap up really rather than review. Either way, let's discuss exactly what's happening and what occurred today. Okay, so as always, bringing you a inter-market analysis approach, which is old school, as we all know, with regards to Mr. Murphy, Lewis B. Mendelsohn, Anna Cooling now in the UK. It certainly seems to be gaining ground. Hopefully, I'm trying to put this theory and this concept of understanding the market, like Paul Tudor Jones did, okay, and the way in which he interpreted and read the markets based on forex, bond market, obviously looking at the equity market, and looking at the commodities market and trying to read in between the lines, so to speak. Okay, especially with central banks now actively engaged and are the major players in this game. Okay. So where exactly are we? Where are we going? And what's happening? So what I always try to do is obviously give you an account of basically what's been happening in the morning. So basically we start off, let's give you an account. We start off with regards to the Hang Seng, the Shanghai negative, the Nikkei negative, therefore risk off scenario. Okay. The night before, the market sold off in the last hour because of the ECB changing the rules with regards to the Greek bonds being used as collateral, etc., etc. Market sold off, uncertainty, fear, as we all know, risk off. Okay, so then what happens? Okay, we also have Mr. Buffett coming, or Mr. Buffett, I call him Buffett personally. Anyway, but Mr. Buffett coming on and obviously trying to talk the dollar down. And the reason why he attempted to talk the dollar down is because obviously it's causing a nuisance with regards to earnings. Obviously, that is going to be one of the big obstacles for earnings going forward. Either way, you can see H&S formation there on the US dollar and the daily chart as well. Basically, is on the verge of a breakout. Now, the question you need to ask yourself here is, will the US dollar break out higher? Or should I say lower, should I say, or will it continue on in this bullish channel? That's the question you need to ask yourself. The economic data today was promising. Okay, the economic data today was promising. We had unit labor costs rising, so again, overall, from my perspective, I mean, let me just quickly go over it again, see if I've missed anything out at all. Let's just go over this again. So US data, US initial jobless claims lower than expected, so bullish sign. Okay, continuing jobless claims more or less in line, so call that neutral. Trade balance was obviously negative, so therefore call that dovish and bearish. Unit labor costs rising, so therefore obviously that itself would feed through to inflation, so therefore the whole concept is that they're trying to fight deflation. So from that perspective, that's hawkish, and that's actually bearish for the market in terms of rate hikes going forward. US non-farm productivity minus 1.8%. Again, that's I mean expected was 0.5% plus, came in at minus 1.8, so that's bearish. So mixed set of data there. Okay, you can't really argue either side, but I'd say that the Fed is more or less focused on number one, jobs, and number two, deflation. And if you are your emphasis and focus is on that, then therefore you should have a strong dollar. Okay, unless obviously some Fed member decides to talk the market down. Okay, either way, keep an eye on that. Okay, bear with me 1 second. Let me just get this latest chart sent out as well. Okay, so very important. Okay, so the dollar itself will be quite crucial here with regards to the markets, and that's one of the reasons why you're more than likely seeing a rally in the oil price. Okay, one of the reasons why you're seeing a rally in the oil price, but whether or not that oil price rally can sustain itself again is debatable, because demand certainly isn't there, especially with regards to US data. So the H&S is certainly playing out. I mean, you can watch the if you go to your crude chart now on the 10-minute, you'll see that there's a H&S formation that's currently playing out as we speak. You'll see that on my Twitter feed. I have posted that. If I just drag that across, that's not the one. This is the one. Yep, there you go. Okay, so no, that's not the one either. Let me go down, go down, go down, go down. There you go. There's your H&S formation. Okay, so on the 10-minute chart, so therefore that's considered to be obviously it's considered to be bearish for the market, because the whole reason why the market's up at this very moment in time is based on oil. Okay, I mean, also you can argue, and I've already argued, that they're probably front running the Twitter earnings tonight as well, so that's certainly a possibility. So you have to respect that. Okay, So initially, it's a risk-off scenario. Greece concerns, uncertainty, going to Germany, discussing it with Mr. Schauble. Everything from Germans' perspective, basically they adhered to their positioning. There wasn't really any give and take, so to speak. Although the Greek side of the equation has certainly dropped their insistence or insisting towards a haircut. Okay, but from everything that I read between the lines, basically it was sounding as if the Germans were certainly not on board. That's my perspective, anyway. Okay, so from my perspective, the way in which I read the market, okay, it basically is the fact that Germans are very, I wouldn't say anti-Greece. I would say that they're going to hold their position. They're not going to move, especially with regards to Mr. Wiedmann's comments on QE this morning, as well, talking down QE, stating that QE was a mistake, etc., etc., etc. Okay, so the Germans will keep their position. They're not going to move from their position, which means that the pro-austerity policies that are in place, they must remain. Whereas the Greeks, they go holding on to their position. So I couldn't see any reconciliation there. I couldn't see any sort of agreement that would lead towards a resolution. Okay, if anything, the Samaras, the opposition, has accused Mr. Tsipras of backtracking potentially. Okay, giving up on everything that he was obviously attempting to gain power and using those policies, because number one was obviously a haircut. They wanted a 50% haircut. Now all of a sudden haircut's gone out the window. So if he has been lobbying based on that, that's going to cause problems domestically for him. So he can't backtrack now on a haircut when obviously Mr. Samaras hasn't been calling for a haircut. So can you see? I mean, you've got pro-austerity and you've got anti-austerity, and everything that this chap has attempted to is basically being it's hypocritical, and it really is a contradiction in terms. Okay, so this is going to be very, very interesting. So I think the politics of within Europe itself, the market hasn't really priced that in, and the disagreements, because the market has become overtly bullish, and the market thinks that there's going to be some sort of agreement, and that's what the market's reading right now. Okay, obviously adding the QE put as well, that certainly adds spice to the short squeeze. That's one of the reasons why it's been very hard to short this market. I got stopped out on the Nasdaq today. I've been stopped out on the FTSE today, and I still have shorts at this very moment in time. Okay, right, so that's basically the situation that we can see. So basically, how did the German DAX obviously react? Now, we also had economic data as well. So given the fact that Japan and China were down overnight, which equals risk off from my perspective based on intermarket analysis, we also had economic data out of Europe. Okay, so we had German factory orders obviously beating, and that was pretty impressive. So hence the reason why we negated the whole sell-off overnight based on the Greek news. Okay, so if I go to a 10-minute chart, you can see here we gapped down, we went up, we closed the gap, we sold off, we retested the low, and then obviously we bounced towards the close again. Okay, so that news certainly neutralized the bearish side of bearish effect of the Greek news. Okay, and then we had some economic data releases as well. I mean, we had Europe obviously raise its GDP forecasts, which obviously is helping the euro at the moment, and lowered its interest rate forecast. So again, that shouldn't really be considered to be overtly bullish for the euro either. But like I said, it's all about the H&S on the Dow, on the dollar, and obviously talk about postponing.
Allahu Akbar, Allahu Akbar, Allahu Akbar, Allahu Akbar. Ashhadu an la أشهد أن لا إله إلا الله أشهد أن محمدا رسول الله أشهد أن محمد رسول
Anyway,
الله.
okay, so
حي على
how do we interpret the markets now? Okay, so now that I've given you the example about the last 2 Asian
حي
being down
على
overnight and so forth. That's from stocks where there's uncertainty. From my perspective, I never advise for especially on the price. Rather than just going back and forth, especially with regards to
حي
the euro
على
versus euro. Okay, this is my perspective. Okay, and
الفلاح.
I don't think Greece will get
حي على
the anticipated. Greece will be a straightforward resolution on the July 9th, and there'll be arguments to and fro on either side. Okay, so
الله أكبر
what we're attempting to do here, okay,
الله أكبر
is
لا
understand where the markets are going to go. So from my perspective, one of the bigger points will be the euro. Okay, the
إله
euro is going to be
إلا
interesting grounds, and that will, because of the inverse
الله.
relationship between the euro and the markets, or the European markets, because it's all about QE, just like the inverse relationship between the yen and obviously the Nikkei and global markets. So USD JPY goes higher, the US market follows, etc., vice versa. Same thing with regards to euro here. When the euro goes higher, the European markets have to go in the opposite direction, because everything is export led, and that's basically what's providing the stimulus. Okay, if that reverses, then that no longer provides a stimulus. And one of the reasons why the euro is going higher, not because of Greece, which I think a lot of people are misinterpreting. Yes, the Greece situation certainly is out of the equation to a large extent, although there is a lot of disagreements and there's a lot of concern yet to come. Okay, from that perspective, but I think that given the fact that the US dollar side of the equation, and given the fact that other central banks are attempting to ease, okay, that's what's going to potentially force the euro higher. So this currency war concept, and obviously this war with the dollar right now, because like I said, the Fed or the FOMC need a weaker dollar, so when they do raise rates, it doesn't have that impact. So the best way to do it is talk it down in advance, and then obviously raise rates. Given the fact that the dollar is so high at this very moment in time, they can't afford to raise rates, or they can't even entertain the idea of raising rates. Do you understand? That's the reason why you're having this currency war. So if the dollar is due to fall, okay, then that means that Europe is going to suffer because of the export side of the equation. Yes? Okay? So that's basically what my interpretation is. Okay? And also, given the fact that Mr. Wiedmann's comments this morning, okay, Mr. Wiedmann's comments this morning were very anti-QE, that alone should send shivers. And also there were also additional comments about QE ending in 2015 in September. So it's only a 6-month thing, inject the markets, and that's it. It's not open-ended, and so on and so forth. So again, the QE is being put into question, and that obviously is going to send the euro higher. Yes, okay. So that's my interpretation of things. So a higher euro equals negative Europe. So now that we have that backdrop, uncertainty regarding Greece, Asian markets down overnight, and that fear and that concept there, that's prevalent, and also with regards to the oil price potentially forming a H&S formation, etc., etc., etc. What does that mean going forward? So let's have a look at the market from a technical perspective. So if I go to my daily chart of the DAX, even though we've had this talk about Greece and so on and so forth, why has the DAX not made a new high? Okay, again, that's a warning sign to you. So can you see here we had a topping tail, okay, a shooting star, call it whatever you want. I call it a topping tail. Basically means that bulls tried to push the markets higher, failed, and had to close lower. Same thing here, we have a hanging man. Again, negative, okay, and today just consolidation, so sideways, okay, sideways consolidation. That's basically all it was, okay, today. So from just looking at a daily chart, given the fact that you've got a magnet below, which is the unfilled gap below, it's basically telling you that the euro is going to go higher, cause a risk-off scenario. Okay, remember, because euro is now your key barometer for risk on, risk off, same like the yen. Okay, very similar to the yen. Why? Because it's a QE experiment. So a 60-minute chart, if we go to a 60-minute chart of the German DAX, again, I've already put this on Twitter, H&S formation. Okay, H&S formation. Now, what will create this right shoulder is higher euro. And right now, the euro is currently almost at 1.15. Okay, so if you look at it from that perspective, risk off. And what do you see? The head is being at almost 11,000. Then the neckline is around the 10,700. So you're looking at almost a 300-point drop. So 300-point drop takes you exactly down to 10,400, which is gap fill. Okay, abracadabra. Abracadabra. It can't get easier than that. Okay, so that's my understanding and my reasoning. Okay, there are various other reasons as well. For example, if you use intermarket analysis, if you look at your biotechs, you've got H&S formation. So you've got gap fill resistance. You've broken out this channel. Okay, H&S formation. So if biotechs are going to go down, the Nasdaq's going to go down. Nasdaq goes down, the German DAX goes down. The Nasdaq and the German DAX are intertwined. Semiconductors were making lower lows, lower highs, are into Fib 75% resistance. The Nasdaq, you're looking at a potential bear flag scenario, and the market is now exhausted and is potentially looking for a move lower, and obviously you've got the unfilled gap below. So again, that's another factor as well. Obviously we've got Twitter earnings later on today. We'll see exactly how that occurs. With regards to the FTSE 100, you've got horizontal resistance. So you've got horizontal resistance there. That's going to hold. That's going to hold. Okay, and the market is not going to be going any further or any higher. Okay, so that's basically how we're interpreting that. Okay, so at present it's all about oil. Oil is now the H&S formation, which I explained to you. If you look at the H&S which I've put up before, you'll see that the H&S formation was telling you that oil is going to go lower, and that's exactly what's happened. If you go to your oil chart now, and I can drag this across and show you. I mean, you can look at your chart as you wish. There was the neckline that I showed you at 51.34. Oil price is now currently trading at 50.4. So we've had a $1 drop in oil. So what do you think that will translate as? Yes, negative for the actual markets themselves. Okay, so remember the whole market has been going higher based on oil, and now we're looking to potentially test 50.5. We're currently at 50.3 already. 50.2 will be a key testing zone, so keep an eye out 50.2. And again, the economic demand or economic data isn't strong enough to support the market regardless. Okay, so bear that in mind as well. So very, very important to take that into consideration. So interesting scenario that we have before us. Okay, and again, it's all about intermarket analysis. Can you see how I've used the Nasdaq to propel and project a weakness in the German DAX? And remember, the chief in Europe is DAX. The chief in Asia is Shanghai, although the Nikkei is now competing due to QE, and obviously the chief in the US is the Nasdaq. So it's very important, which obviously is led by the semicons and the biotechs. Okay, so again, learn intermarket analysis. That's the only thing I can tell you, folks. Very important to learn intermarket analysis. Now let's cross-reference that weakness in the DAX with our S&P 350 Europe hanging man. Okay, exactly at the previous resistance level. So we had a bearish engulfing candle, and that's exactly where we finished today. So what does that mean? Risk off. Yes, risk off. Okay, risk off. That's basically my argument. Can you see how every variable that I'm looking at right now and cross-referencing, cross-market analysis is telling me the market's going lower? Okay, so very, very important for you to do that yourself as well, and study and learn and educate. CAC. Let's have a look at the daily chart. It's going to be interesting here. The CAC is the only one from this scenario that this is actually going to move higher. So again, the CAC at this very moment in time is very hard for me to argue that this is bearish. So this would be a counter argument. Okay, so if I were to say the market's going lower, this will be a very strong counter argument to my thesis. But given the fact that the German DAX is the leader and the Nasdaq and the DAX are intertwined, it's very hard for me to say the CAC is going higher. All I can say is negated or bullishly engulfed the hanging man candlestick, so one could argue that this certainly is going to go higher. So from my perspective, a very weak argument for the market to reverse. So therefore, I have to take that and respect that, and let's see if we can look at other variables, and let's look at the majority. The Euro stocks, so let's look at the Euro stocks again. Daily chart of the Euro stocks. After the doji candle and this horizontal resistance up here, the market hasn't moved higher. So no higher high, unlike the CAC. Okay, so again, that's a warning sign. We have an unfilled gap below that needs to close at 3366, potentially lower, and we also have a potential retest down here. So again, adds weight to that argument, yes, with regards to the market there. Okay, let's have a look at another one. Whilst we're here, we have the S&P 350. So we've covered majority of the European indices. Okay, we could have looked at the IBEX, which IBEX is actually down today. if I look at the IBEX, I mean, if you go to the Swiss market, it was down negative. So again, adds argument to my thesis that the market is going to go lower. IBEX again down 110 points, and the Athens market is down as well, down 3.5%. The IBEX is down 0.4%, and the Swiss market is down as well. So overall, everything from my perspective certainly looks very bearish, and I'm expecting a potential move lower based on that information. Okay, folks. So if I just go to a 10-minute chart of the Euro stocks, see if I can see anything here. I mean, you've got this gap fill up here at 3415, and after that we're looking for a potential move lower. Either way, we are obviously into resistance here based on this diagonal trend line, and it's all about this unfilled gap at 3370. So that's basically what I'll be targeting on the downside with regards to the Euro stocks. Okay, folks, so that's basically my summation. I mean, we can look at the S&P 500 again, cross market analysis, which more or less will confirm. One of the important variables I always look at with regards to the FTSE is the volatility index, and we are coming into support on the volatility index again, which is quite interesting. Again, looking at a potential move up to the 20s for the FTSE, and obviously that's causing a risk-off scenario. The FTSE 350 again stuck in that resistance, not really moving higher, and it needs to be propelled, or it needs to move higher. The USD JPY again, we're just into that zone, recessing previous support equal resistance, and no real move here. It's potentially a lower high, and it remains a lower high, so therefore risk off. Okay, that's basically how we're interpreting that. FTSE 250, very stellar rally, but again we're into that horizontal resistance. So basically you are at double top resistance. So what does that mean for the FTSE? Risk off. Yes, risk off. Okay, that's basically what it means, and that's how we interpret the market with regards to that. Again, Russell 3000 is into horizontal resistance, so therefore risk off. S&P, I mean, we can look at the Dow again, horizontal resistance, therefore risk off. Again, we can look at the Russell 2000. We looked at the 3000 before. We look at Russell 2000. Again, gap fill resistance, therefore risk off. This is quite an old chart, so let me just get rid of all this TA that I've done, which obviously is obsolete now. So again, gap fill resistance. What does gap fill resistance on the Russell mean? Risk off. What does a Russell? Russell is a leader for what? The S&P 500. So what is the S&P 500 telling you? And this is why I tweeted out today, watch out for the S&P 500, because you have got resistance around the 2057, which is gap fill, and that's exactly where we've been stuck and not really moving any higher. So again, if you look at the S&P 500, we have this resistance zone here, which you can see here. If I just zoom back, you can see that gap fill, which is at 2056, 2057, and then you've got horizontal resistance here, and you had horizontal resistance here, but we're holding that for now. If you look at a 60-minute chart, you are into that horizontal resistance zone. We have pushed higher, certainly have pushed higher, and we'll see exactly what happens with regards to holding resistance. But I do expect that. Again, you certainly have some room for a test at 2064, which is previous resistance. But for now, that's basically where we are. Okay, so that's my summation with regards to the European markets, which all again, the only one is a CAC, which is one could argue is certainly bullish, but compared to the rest. And the German DAX, like I said, 60-minute chart certainly, or the H&S formation certainly has weight and credence behind it with regards to it playing out. Okay, so keep an eye on that. And one of the most important things, like I said, is when you have a shooting star or a topping tail followed by a hanging man. That's not exactly a bullish sign. So again, like I said, the Germans oppose the actual any potential resolution. Okay, so very important. Yeah, very important. So for now, it's risk on, risk off, wax on, wax off. Goodbye now.